I have two things. First thing, RM pressure you are talking about right now. Do you see like when will be the EBITDA positive and because obviously in the market we are only followers at this point of time. While Asian Paints has taken a large hike in the month of October, November, December, and even in January. What is your outlook? What kind of price hike we have taken, and what price hike we are going to take it further? And do you see if I'm not for the investor interest taken, because now we are hearing Grasim is getting into the action. JSW become very aggressive now slowly. So do you see where we are placed relative to our peers who are much larger financial concerns? Thank you.
Thank you, Abhishek. So far as EBITDA is concerned, we are hoping that the fund flow should happen by end of this month, and from next month we will be EBITDA. Hopefully, we will try to be EBITDA positive. Even now, if we observe, we made a revenue of 97 crores. Our raw material cost was around 76% of the revenue. Last year, same quarter, our raw material cost was 64%. So if our revenue cost would have continued to be 64% this year as well, then we would have been EBITDA positive. In fact, much better than that. So the difference of 12% in raw material cost is what is harming us. We have been able to cover a part of it in the month of January. So in January, our raw material cost was down to around 72%. It basically means out of 12% difference, 4% has already been covered up. Balance 8% also we hope to cover up as and when the funds will flow and we will be able to improve our purchasing power and product mix. So we hope to be EBITDA positive from as early as possible, maybe next month or next to next month. As regards the second question regarding the large players which are coming in, so as you are aware, our market share today is hardly 0.5%, and the big market share is with people like Asian and Berger. So when these large players come, most large players like them will have a tendency to enter into markets which are big markets. Big market means tier 1, and our markets are primarily small markets, tier 2, tier 3. We are mostly in Himachal Pradesh, Bhutan, and smaller cities. We don't have a presence in Bombay or Bangalore or these kind of large cities. So going forward, definitely whenever any new player will come, it will affect everyone. And my expectation is that larger cities and larger players will be affected first. So where we are concerned, we are only looking for a share of around 1 to 1.5% in the market. With 1 to 1.5%, we will be able to triple our revenue, and that should be a good beginning for us. So I think the larger players coming in, our impact on us will be limited, and it should be possible for us to sustain ourselves. And in addition to that, the market is growing at around 10-12% per year. So with that, new players coming up, they will take a couple of years to stabilize. Like JSW has taken already 2-3 years. So by the time they stabilize, the market also would have grown by another 40-50%. So there will be space for more players. So we see limited impact of the new players on us. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Venkat from 3 Sigma Financials. Please go ahead.
Thanks for the opportunity. Sir, one observation that I have been noticing for the last 4 quarters, rather, Q4 of last year onwards, our unit economics itself is actually negative, right? So if our unit economics itself is negative, how would the additional funds actually help us in either becoming profitable or scaling up? So kindly, help us understand.
So thank you for your question. So there are 3 parts to profitability. The first part to profitability is that you should be able to earn sufficient revenue. To earn sufficient revenue, you need to have working capital, which we were lacking. The second part is you should have a purchasing power. When I say purchasing power, you should be able to pay to the supplier in time so that he gives you the right price. There's a second requirement. Thirdly, in any consumer goods company, particularly like paint, you need some marketing activity. Now today we have negligible marketing activity. We are not able to give any machines to the dealers. We are not able to even give smaller boards to the dealers. We don't do any marketing BTL activity at all. So, and also we are not able to take care of the painters. So if you don't do any marketing activity, you don't take care of influencers, and your revenue is limited because of the working capital, the purchasing. So the opportunity for turning around becomes limited. With funds, these three issues will be resolved. Our revenue can go up because working capital will come. Our purchasing power will be better because we will have paid to the suppliers, and we will be spending some amount on the marketing activities. So with these three things, we should be a bit positive. And also, one more small additional factors could be that the partner who is coming is also in distribution of construction material, and paint happens to be one of the categories where they are active. So I think this particular thing will help us not by way of funds only, but also by way of strategic partnership.
Yeah, I would like to ask about the partnership later. But if I remember right, we had a rights issue earlier also, and the additional funds did not really help us scale the business as much as we actually anticipated. So can you throw some light on that? Why it did not happen then, and why do you think it will happen now?
Three differences. First, you see, that time they were looking for more funds, but because the situation was not very conducive for raising of equity at that point of time, we were able to hardly collect 200 crores against our requirement of 250 crores. As a result, we continue to be always slightly restricted on fund availability. Despite that, if you recall, before COVID, we had become EBITDA positive, and we were having cash positive for some of the periods. However, in March 2020, when suddenly COVID struck, we had absolutely no revenue, and our expenses continued to be there. And we burned cash. Whatever little cash we were as it is on the edge. So whatever cash was there immediately got burnt up, and then we became short of money. That short of money continued to increase despite Corona coming down, Corona going up, Corona coming down. Even then we might have handled it, but for another important factor, and this is where we got stuck. That is, raw material prices went up by as much as 40 to 50%. Normally, if you have seen, in all industries, the players have increased their prices of goods as and when raw material prices have gone up. Ours was one unique industry where the major players, the dominant players, they did not increase the prices. Because of that, we suffered very badly. It doesn't mean that they did not suffer. If you see all the major players, their EBITDA level, their COGS, their cost of goods also increased, and EBITDA came down. The difference is their EBITDA came down from 25% to maybe 12%, and they could survive it. But our EBITDA went down from 6% to minus 6%, and we were finished. So this is two major difference. One, we didn't have revenue. Our revenue came down because of the COVID period. But more than that happened is that we got a hit because of the raw material prices. And raw material price hit every industry faced. They could overcome it, but the industry increased the price of finished goods. We could not increase it. And that was a hit. This time, prices have gone up. Again, if the raw material price will go up by 25 to 30%, well, that outcome could be different. We only hope that the eventuality will not come. But if it comes, and again if the main player in the country doesn't increase the raw material prices, I think we will again have a challenge in front of us.
So again, the crude is actually trending up, and usually the paint has inverse correlation with crude actually from profitability point of view. So how do you think, with crude, prices going up, and how would the new help us? Mostly, do you think having higher inventory would actually, save us from increase the price, increase raw material prices? Is that how you are seeing?
So, if the last time when the price increase include, you would have observed the crude was used to be around $40-$45. It went up to around $75-$80. So this was the kind of increase, 100%. Now, to the base of $80, crude is supposed to go to $100 or $110. This will be around 50% increase. It will definitely have an impact on all the paint companies. Having said that, two things are happening. A, impact of crude is limited. If crude goes up by around 100%, our raw material prices go up by around 5 to 10%. Unfortunately, in the previous commodity cycle, everything including shipping rates went up by 50-60% and in some cases 80%. This time, we are seeing only crude increasing, rest of things not increasing. So impact on us maximum maybe around 3-4%, not more than that, of only crude increasing from 80 to 100. But and assuming that other commodities will not increase, either finished goods or. But I'm talking of commodities per se, if they don't increase, then impact on paint for an increase of $20 may be limited to around 3-4% of our cost.
Okay. So thanks very much for patiently answering. There's only one last question. Can you kindly explain the role of partner in this new transaction that we are talking about?
So two things. One, of course, they are taking part in the equity. They are becoming a partner. They are becoming an equity partner. And so that is a very clear role, very clear position. In addition to that, they are also a large distributor of construction materials. So they are supplying today to over maybe 700, 800 projects. I don't know how many customers they have. So they have a big customer base, and they are one of the leading players in ready mix, concrete, and also significant player of steel and cement. Now, because the customer is same, so it's possible that we may get a headwind towards that. We can maybe we will be able to meet them. We will be able to contact them. We will get an entry into those customers, and it should be possible for us to. So a large number of potential players get open to us. Secondly, this partner is also in retail sales. They have their own showrooms. They may be limited now, but they will increase over a period of time. And they have shown interest in keeping our products in their showrooms. So I think in both ways, and also they are having a significant number of dealers who are keeping currently cement and steel, and it's possible that this partner will persuade them to keep paint as well. So three ways we may be able to increase our sales through their channels.
Sir, one last question. Will they be asking for a board seat, or will they be part of management as well? What are they bringing in addition to funds to the management?
Yes, you are right. So they have there are two parts to it. One is they have asked for one board seat, which obviously we have agreed, and secondly they have asked for a change of auditors in days to come. And they want one of the top 6 auditors firms to be appointed as a statutory auditor. These are the two things only they have asked. Otherwise, they have no other role in the management.
Okay. Thank you very much, sir. Thanks for patiently answering my questions.
Welcome, sir.
Thank you.
Thank you. Before we take the next question, a reminder to the participants, please limit your questions to 2 per participant. Should you have any follow-up, may we request you to rejoin the queue. Next question is from the line of Asha Patel from Molecule Ventures PMS. Please go ahead.
Hello. So my primary question is regarding the infra market infusing funds with us. So in future, can we expect some sort of management control by the company, wherein they will acquire the entire remaining stake of the promoters and they might run the business themselves?
So to the best of our knowledge, they are only limited to the. So currently they have taken
Sorry to interrupt. Mr. Patel, if you can take the phone off speaker, please.
Yeah, just a second.
So currently they have already taken 24.8%. They are ready to take 24.8% as equity. In addition, they have taken some debentures, which they are allowed to convert, which can take their equity to around 28% on odd. At this moment, there is no discussion or agreement over a possible increase in their shareholding by way of transfer of shares from the promoters to this group.
Okay. And sir, as far as my limited understanding goes, both of our company's promoters, Mr. Jindal and Mr. Jindal are no more on the board of directors since FY21. So are they not involved in the day-to-day operations of the firm?
So the promoters are not involved in the day-to-day management of the company per se. They are only looking at results. However, they have got independent directors who are there, and they are only monitoring the company through their performances. Otherwise, the promoters are not involved in the day-to-day operations. It's totally professionally managed company.
Okay, got it, sir. And sir, I got the explanation. You explained very nicely our reason for being EBITDA level negative because of the COVID and everything. But even if we see in the past, we were never able to generate even low double-digit margins or high single-digit margins in the firm on an annual level, say, over last decade. So just to understand broadly, what exactly issue are we facing? Is it our manufacturing product quality is not sufficient up to the mark, or we are facing difficulty in distributing the product?
In short, it's a management issue. So I think somewhere the management has to be different, has to be better, and all the things which you are mentioning regarding quality, regarding distribution, regarding product, all these are things which can be controlled by management. So ultimately, the company doesn't work well. Somewhere the management has to improve.
Exactly, sir. So I did observe over last 5 years, say multiple times, CFOs, CS, MDs, chairmen, everyone's are getting changed. So there was no single 100 control in the company for sure. But hopefully, going forward, that won't be the case.
Well, you see, the things have to go back. All the things combined can make it worse. I think if you observe, there has been a lot of changes in the past we have made. We have tried different permutation combinations. We are still working on it. And a day will come and suddenly change things, and we kind of start praising it. That's what will happen here also. Last 2 years were particularly bad because the person who is already sick, if he faces further bout of COVID, he's going to be in difficulty. And this is what happened exactly to us. We were, as it is, not very healthy. And on top of that, COVID took away 2 years. And more than COVID, as I told you, the commodity cycle took it over. So we have faced these two challenges, big challenges, big setbacks. Hopefully both are behind us now. And with this infusion, it will be a fresh beginning. And also, you see, this group also is helping us to tide over the small parts. So there are two things if we do. You just see that if you just analyze our last quarter, revenue is about 97 crores. Our COGS, cost of goods, is around 76. If my cost of goods comes down to 65, I am through. I am making cash positive, and that's all is there. If my revenue goes up by 10 crores, then again I am through. I don't need anything more. So both the things are just there. This small gap which is there, we are not able to build up because whenever we build up this gap, something other happens. Infra partnership will help us on both sides. A, they will give us the extra revenue we want. We ourselves will take it, and they will also help us. And B, we have already done some price increase. As you know, steel, all the paint manufacturers increase the prices in the month of December. That price increase has happened. Commodity prices have not been increasing for last 3-4 months. So I think both together we should be crossing the challenge now, crossing the hurdle now.
Okay. And sir, going forward, can we expect some sort of exclusivity when it comes to reselling of paints from Infra market, wherein they would procure the paints only from us and we would be only the seller? Because given the fact that they have invested equity in our company, can we expect that sort of exclusivity which would ease out the marketing problem completely from the company?
So, see, that is expected to be natural outcome. But if you ask me personally, I don't want it to be natural outcome. I'd like to win it rather than be given on a platter. So I will make sure that they don't go to anybody else, and that is I will make sure through my own efforts. I'm not looking for any kind of a good gesture from them. I'm looking for them that they do the buying on the best basis, and my advantage will be my entry will be available to them. So we will win it on our own, not rather only because they are our partners, but because we are the best.
Wow, that's very good good thought to have. And one more, sir, all the best for the same thing. I hope we win it deservedly. And another thing is that currently, do you have some sort of numbers, given that we have done partnerships with Infra Market, that currently how much of paint sales are they doing annually from their online and offline platforms?
Actually, you see, as you know, they are a closely held company. They don't share the numbers with anybody, neither with us also. But they have got their very good plans, very big plans. They want to make paint into a very big vertical for themselves. And whatever vertical they make, we will try to ensure that of their complete vertical they make, we at least take 70 to 80%. So wow. It's going to be a big contribution to us.
Really good to hear that, sir. And can we encounter a situation wherein we might need to sell only like say unbranded paints, and they might have their own brand, private label brand, and we would just supply the paints to them? Is that a possibility, or we want Shalimar brand to be intact across?
So Shalimar brand will be always intact. In case they want that we should do some contract manufacturing, why then? We can do contract manufacturing for anybody so long as we make money, because we have sufficient capacity. And you may perhaps be aware, creation of capacity in paint industry is not very expensive proposition. So capacity is never a constraint for us. So if anybody wants that we should make paint for them on a contract manufacturing basis, I don't think we will hesitate to do that. Having said that, our attempt is that our brand Shalimar should be so well known that they will think twice before thinking of their own private label.
Wow, really good to hear that, sir. And last question, sir, from my side. So historically, if we see, we have companies encountered 2 fire incidents in the plant. So generally, we have seen all the fire incidents are related to chemical or pharma company. Rarely heard anything about fire in paint manufacturer. So where exactly were we going wrong in past in terms of our protocol, and how do we assure, how do we make sure that going forward the same instances won't be repeated?
So there have been 2 fire incidents in Shalimar, one at Howrah plant and one was in Nashik plant. Howrah plant was a very, very old plant, I think more than 60, 70 years old. So what you are rightly saying that fire normally happens in pharma and those kind of companies. So your analysis is very right. Fire will happen wherever there is oil, crude oil, which is a solvent. And pharmaceutical companies do have a lot of solvents, and so do paint companies. We are not aware of it, but a lot of paint companies do have small fires. Normally, fire fighting systems are very good. So focus is always on firefighting as much as on avoidance. But avoidance becomes difficult because somebody will definitely smoke in the factory, somebody will do something by which fire comes up. You will have puja somewhere, so many things are there. But people have very strong firefighting mechanism. But that's why we don't know it, because in a corner of the factory or some fire was there, it was doused by either water or foam and all that. We had a firefighting system, but not to that level. Learning from this experience, now we have taken our firefighting system to the state of the art. Already our Chennai facility and our new Nashik facility has state of the art. We have upgraded our facilities in Secunderabad also. With the new funds coming up, we will make sure that all the 3 factories are totally fireproof. Let me tell you that today it is our Nashik and Chennai are almost very well guarded. Secunderabad, whatever deficiencies we will find in our audit, we will remove those also. So we will ensure that in the future such incident doesn't happen.
Sure. That's all from my side, sir. Thank you so much for the explanation. All the best.
Thank you. A reminder to the participants, please limit your questions to 2 per participant. The next question is from the line of Aditya Deora from Divisha Investments. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, what will be our priority now with respect to capital allocation? Would it be new stinting machine, debt reduction, or working capital improvement or allocation in working capital?
So we have made a plan for about 40 crores of capex, 40-50 crores. We are still working on it, analyzing it, but I think initially that's the range. And the plan is, as you also mentioned, about some balancing facilities in the plant, some maintenance capex, and on a tinting machine we'll be spending some money because that is required. We'll be spending some money on R&D. And on some marketing. So it's a small amount of money in different areas, pockets. Basically what is essential. The rest of the money we'll try to take it for the working capital purposes. And from the profit we will earn, we will try to expand further. That's the basic strategy.
Okay. And sir, how many stores does Infra Market has right now in retail? Like they do have some retail stores also, right?
So currently they have very limited. So one is their own stores. Their own stores may be limited to I think some 15-20, but they have a large number of dealers with whom they are working, which I think maybe in thousands. I don't know how many thousands they have. I don't have the data per se, but I understand this figure of 15-20 of their own stores. They are trying to increase it to 100 stores. So that will be a big number. They are already opening in some big cities like.
Sir, I'm sure management has internally worked that this much percentage of our revenue can incrementally come from Infra Market channel in future. So it would be very kind for us to know if what are we thinking? Maybe 20%, 15%, 25%. What percentage of our revenue in future can come from this new channel?
So we are expecting, and days to come, it will slowly increase. But perhaps in the initial years it will be limited to 5 to 10%, and maybe second year it may be around 20-25%.
So maybe we can look to be maybe PAT positive in second year.
I will try earlier.
Perfect. Thank you, sir. All the best.
Thank you. The next question is from the line of Saurabh from Exchange for Solar Investments. Please go ahead.
Good afternoon, sir. Congratulations on the Infra Market deal. Actually, that sounds pretty interesting, and that got me to look at the company. So I have two questions, sir. Sir, have you already started some sales to Infra Market?
So I think, as I say, it's a question of concept testing. We have done some concept testing to see whether this kind of thing is possible or not. But sales per se will happen once the funds come, which we are expecting maybe in a few days. And then, of course, we'll be doing in a formal manner. What we have done till now is we have a series of interaction with their sales team. So we have had interaction with their sales team who are on the ground, which are basically for construction materials. But if you ask me revenue-wise, I don't think there has been any significant contribution till now.
Okay. Sir, my next question is, sir, since you have been associated with APL Apollo Group in past, and we share some common target segment with them, so is there a possibility that we can explore reaching out to their target customers, to their customers, through them, through a partnership with them?
You are right. Very good point. We will be exchanging information about customers. For example, APL Apollo is doing significant work in large projects for hospitals and for large buildings. So we are exchanging information with them on the projects which we are working on, and we'll be giving them information on the project on which we are working on. So our cooperation will be limited to exchange of information only.
Okay. That sounds interesting, sir. Thank you so much.
Thank you, Ian.
Thank you. The next question is from the line of Abhishek Jain from Arihant Capital. Please go ahead.
Sir, just a question basically, how much price hike we have taken on YY basis, if you can share that.
How much?
Price hike.
So we have already taken price increase of around 13-14% on YOY basis. If I see my average prices on in January 21 and January 22, the increase will be on an average around 12-13%.
So, but like if I say the December quarter number, we have done a 4% increase right now from 93 crore to 96 crore or something like this. So is there any volume decrease we have seen in this quarter?
So you see that the increase I have given you is on January to January. In October, December, we didn't get this kind of increase. It was much less. Maybe we have got only a small part of it, not 12. It may be around average around 5-6% for the quarter. But yes, so far as volumes are concerned, our volume for October, December are slightly lower than our volume for October, December 20.
And can you, 3 years down the line, what kind of top line we are looking? Can we see 1,000 crore kind of number in 3-4 years?
Yeah, so Abhishek, so our projection, if I talk about design fusion of this capital and the strategic partnership with Infra, so our plan is to touch this number of 1,500 crore in 3 years' time.
Okay, 1,500 crore. And what will be the margins at that point of time, sir? What kind of margins we are looking at?
We are looking at a beta of around 8 to 10%.
8 to 10%. Thank you, sir. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Vivek Joshi, an individual investor. Please go ahead.
Hi, this is Vivek. I have a couple of questions that given that they have taken an equity stake Infra.market, that is, so are there discussions already happened on the sales processes and the transfer pricing, etc., or it will be like a completely arms-led transfer pricing, or will they get some better deal, like will our margins be lower in our sales to them? And second question, you said that capacity is not a constraint. So can you give me some idea of like capex required to, for let's say 100 crores of additional capacity that we want to create, so that if the volumes are go up, we can figure out like what are the capex needs that are going to be there? Just these two questions.
So, okay, Vivek, thanks for your question. As far as revenue from Infra market and the pricing to Infra market is concerned, it would be at the arm's length pricing, and the pricing would be at par with other dealers in the market, right? So there is no special treatment or the special pricing. However, being a distributor, whatever we are passing on to the distributor on pan-India basis, the treatment is same. Right. And if I talk about the capacity utilization, as on date, my overall capacity utilization is 50 to 60% even today, right? And with increasing trend of my top revenue, I am able to cover the revenue of around 800 to 1,000 crore rupees with my bought-in purchases. So till 1,000 crore, I am not forcing any capex enhancement, but yes. But yes, at the same time, small brownfield projects which we are anticipating, for bringing the efficiency and increasing the capacity to cater around 1,500 crore in 3 years' time. We are also planning to, make some brownfield projects.
Okay. No, but that's fine. That it's great that you already have operating leverage there, that we are not going to need any more capex to produce extra. I just wanted to understand, since you said that, like suppose you want to set up a 1,000 crore capacity plant. So what is the capex approximately, just to understand, get a flavor of the industry a little bit, if you can help me with that.
So if it's a brownfield expansion, what we are planning, you can create a capacity of more than 100 crore with an investment of less than 10 crores.
Okay, thank you. That helps a lot. Thank you so much.
Thank you. The next question is from the line of Asha Patel from Molecule Ventures PMS. Please go ahead.
Thank you for the opportunity. My only question is, as you mentioned, sir, am I right in understanding that we can achieve, say, top line of 1,000 crore with the existing setup and plant with just minor debottlenecking or capex for that purpose? And to reach 1,500 crore top line, we need to infuse, only 50 crores. Is it right?
Yeah.
Okay, that's all from my side, sir. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Manan Patel from Airavat Capital. Please go ahead.
Thank you for the opportunity, sir, and congratulations for the Infra market deal. Sir, I wanted to understand you as you envisage 1,500 crore sales in next 3 years. I wanted to understand what kind of capability building in terms of management, employee strength would you require to do. I have seen your journey of change in management over last few years. So where in that journey are we, and what additional capacity or employee strength will we need to build to reach to this target?
So, journey from our 350 to 1500 is a long journey, and we will need a good leadership team as well as a good support team. We are already planning the exercise of recruiting those the senior team particularly. We are looking for people in marketing and sales and in production on all areas. So, two areas of focus for us in this journey are R&D and second is HR. So we are looking for a good team and we are looking for a good R&D setup. The work on both of them has started, just initial steps have been taken. Once the funds flow in, the work will be expedited. So we are looking at increasing our expense on human resources by around 40 to 45% in next 3 years.
Okay. So secondly, I wanted to understand with a lot of announcement, at least announcement is happening related to capex, and we being a stronger player in the industrial segment. So if we put infra market aside, what kind of growth do we see from the industrial segment from our current setup? Because almost 35% of the revenues come from industrial segment, from what I understand. So what are your views on that?
See, industrial segment, we have got a very good product line. We got a customer base, and you are like I said, we are around 35%. And because of the good product line and good customer base, we have excellent potential there. We have two limitations. One is our own field strength. We have a very limited number of feet on the street for industrial sales. And second limitation is R&D. Our R&D facility needs to be increased or improved upon if we have to serve. As you know, industrial customers, they want customized products. They don't want standard products unlike which is there in decorative. And if you are made to make specific product, customized product, you need a large R&D. So we need to have large R&D, feet on the street, to achieve a big jump in industrial products. We are planning both.
Understood. Sir, any plans to enter in the auto segment?
Not at this sector. You know, auto sector is already cluttered with so many large, strong players. Entering that market is not easy. And secondly, it is a time-consuming job. Our strength lies in protective coatings, in coating on iron and steel. So our focus will be to stay on iron and steel or protective coating. We are very strong in pipes, steel pipes. I think we'll try to become stronger there.
Understood. And so the last question is, what kind of marketing spends like A&P as a percentage of revenues should we expect over next 2-3 years?
I think we will not be able to do more than 3-4.
Yeah. As Mr. Gupta said, we are projecting around 3% of the revenue in the marketing line, especially in the BTL. So we are planning to spend on the influencer side and secondary schemes to motivate our dealers and the painter segment. They are the levers to the growth of the organization.
So, sir, right now BTL in next few years, but I think as and when you grow, you will also scale up the ATL as well, right? Is that understanding correct?
Definitely.
Great, sir. All the best. That's it from my side.
Thank you very much.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to Mr. Ashok Kumar Gupta for his closing comments. Over to you, sir.
I must thank all the participants. A wonderful introduction. I know we have not been doing well. Let me tell you, our team is excellent. Our efforts are excellent. Our intention is right. We need some support. We are getting it now. Hopefully, you will see a different Shalimar Paints in days to come. Thank you so much.
Thank you.
Thank you. Ladies and gentlemen, on behalf of Shalimar Paints Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect your lines.